Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Could be a big day. We've got the presidential deadline for Iran to accept his terms or go away. Completely away, like the civilization gone. U.S. struck Karg Island as Trump repeats threat to destroy Iran. We have the S&P 500 down 0.8%, sitting at 65.53. The Dow Jones Industrial Average down 0.75%, sitting at 46,306. The NASDAQ down 1.3%, sitting at 21,701. The Russell 2000 down 1%, sitting at 2516. The VIX is at volatility level, 27. If we get to 30-40, we're going to see a 5 to 10%. We're going to see the markets pull back. Gold not doing what gold's supposed to be doing. It's trending lower. Not by a lot, but it's noticeable. Bitcoin's down 1,700 to $68,005. 10-year Treasury sits at 4.38%. That's really the story here. And I'll go into that in a minute, but I don't think the market's really upset by oil in Iran as much as it is by interest rates. U.S. households are seeing their finances deteriorating as rising gas prices are hitting them. We're north of $4 a gallon on the nation. We're around $6 a gallon in California. Year ahead expectations about households' financial situations are also deteriorating, with the largest share of households expecting a worse financial situation and a smaller share of households expecting a better financial situation. Sometimes just those expectations alone could curb vacations and curb spending. I've got a good show planned for you today. So the big question right now is, will Trump follow through on his threats? The market is worried, with the S&P 500 heading lower. Oil stocks as a group was mostly higher, with energy prices remaining elevated above $110 a barrel ahead of U.S. President Donald Trump's threat to attack Iran's civil infrastructure by 8 p.m. tonight. So ExxonMobil and Chevron both higher. Iran has cut off communications with the United States. Trump said last night, and by attacking, well, let's talk with Karg Island first. By attacking Karg Island, it handles 90% of Iran's oil exports. President Trump has said a whole civilization will die tonight, never be brought back again, unless Iran meets his demands ahead of the 8 p.m. Eastern Time deadline. He says, I don't want that to happen, but it'll probably will. Wow. He added that maybe something revolutionary will happen following a regime change. Goldman Sachs came out with a note this morning that is pretty optimistic, I think. Let's go into it. The tech sector has been getting hammered. Peter Oppenheimer at Goldman Sachs and his team are making the case that we're looking at a generational reset. The core of their argument is that tech stocks are suffering their worst relative performance against the broader market in 50 years, essentially while everyone else has been piling into the old economy value stocks like energy, industrials, and chemicals. Tech has been left in the dust, despite its earnings actually holding up quite well. Goldman points to a few specific green flags suggesting the sell-off has gone too far. So he's talking buy the dip. First, the PEG ratio reset. The PEG ratio is the price to earnings of the company, the PE, to its growth rate. For tech, it's now actually below the global market average. Goldman notes that the level of pessimism is currently as high as it was right after the dot-com bubble burst in 2003-2005. There's the hyperscaler value. Stocks like Amazon and Alphabet are now trading at valuations nearly identical to the average S&P 500 company, which is historically rare given their growth rates. There's resilient earnings. Analysts are still expecting tech earnings per share to grow by 44% in the first quarter of 2026. Goldman argues the market is punishing the sector for its high capital spending on AI, even though the spending is exactly what's driving those earnings. Then they bring in the Iran war factor. Goldman thinks the conflict in the Middle East actually makes tech more attractive as a defensive play, stating if the disruption of the Strait of Hormuz continues, it might trigger a growth shock that forces central banks to stop raising interest rates. Since tech companies have massive cash piles and are net sensitive to short-term economic swings, as say a regional bank or a retailer, they may actually prove to be safer havens if the economy cools. Current market context in all this is the market is currently on edge as we hit President Trump's deadline coming up tonight regarding the Strait of Hormuz. While the broader indices are drifting slightly higher today, there is a clear split between energy and banks. Both of them are still catching a bid due to oil prices at 112 and Jamie Dimon's optimistic letter on the U.S. resilience. And there's tech, which is mixed. While Apple and Amazon are up about any small amount, Microsoft and Tesla continue to struggle. Goldman's take right now is that essentially the valuation gap has become a valuation canyon. If they're right, we're seeing a repeat of the early 2000s where the strongest tech names eventually roared back after the sanity check. So the healthcare sector is having a gap up this morning as we got a understanding in cost on Medicare. The magnitude of the upside revision suggests CMS is becoming more attuned to insurer margin pressures, potentially reducing the risk of further market exits and benefit cuts. So this is a meaningful shift for the managed care group. And you're seeing the healthcare stocks move higher today. CVS, United Healthcare, Humana is up 10%. United Health is up 6%. CVS is up 7%. Analyst research group named Seaport talked about the home builders double downgrading the stocks of Lennar, Pulte, Taylor Morrison, and KB Homes to sell from buy. It also cut D.R. Horton and Toll Brothers to hold from buy. The spring selling season was awful, and mortgage rates have gone up, not down, since the Iran wars broke out. And there's this question mark on the jobs market. How's it going to do? It's been weakening. It's moving sideways. Baird lowered their price target on Visa to $375 from $425. They kept a buy rating. All the payment processors have been incredibly consistent stocks for years. Visa, MasterCard have been trading poorly recently. There's a lot of AI disruption fears going on for them too. Big tech story today, Broadcom. Google and Anthropic. The Hock Tan run company agreed to produce future versions of Google's AI chips through 2031 and expanded its compute deal with Anthropic, drawing on those Google processors for capacity. Can Broadcom be one of those stocks that rebounds big right now? It can. That dual announcement with Google and Anthropic underscored its emergence as a foundational player in the AI hardware stack, particularly in custom silicon and hyperscale infrastructure. The TPU partnership with Google not only diversifies Broadcom's AI exposure beyond networking and connectivity, but it also places it at the center of the structural shift between vertically integrated AI systems. The Anthropic agreement adds a forward-looking demand pillar, effectively locking in future utilization of Broadcom-enabled compute capacity and reinforcing long-term growth visibility. Importantly, these developments do enhance Broadcom's competitive stance relative to NVIDIA by aligning it with its customers pursuing alternative architectures to GPUs. Bernstein analyst Stacy Ragson indicated that Broadcom's investor relations team told him that Google's long-term agreement has revenue commitments that go along with and through the timeline of 2031. Gemini 3 launched rave reviews in November. The model was trained on TPUs co-developed by Broadcom and Google. Bernstein's Raskin added that Broadcom's team suggested 3.5 gigawatts are only part of the larger partnership over time. He thinks Broadcom's fiscal 2027 guidance for AI revenues of $100 billion is looking increasingly light thanks to the news. Wells Fargo is out on Intel today, price target $55, up from $45, citing the demand for upside of chipmaker server, CPU, and execution on its roadmap. Wells Fargo's estimates for 2026 earnings per share have been trimmed slightly. But Intel rose also on the news today that Elon Musk's Terafab project are going to be partnering. So the quote that I heard was, Terafab aims to bring all aspects of chip production, from design to fabrication to packaging, under one roof. Musk said the facility is intended to produce up to 1 terawatt of compute annually. The plant would manufacture inference chips for Tesla's robotaxis and Optimus robots, as well as custom AI chips for space-based applications, including solar-powered AI satellites. Morgan Stanley is saying that the project could cost $35 to $45 billion in capital expenditures, likely shared between Tesla and SpaceX. Big win there for Intel. Morgan Stanley downgraded designer chip company ARM to a hold today. The analyst sees execution risks to its in-house CPU initiative and memory supply constraints as a headwind to the near-term growth. Interesting that when they downgraded it, they upped the price target to $150 from $135 in recognition of the rally this year. But the price target has little upside to it at this point in time. U.S. lawmakers are telling Dutch semiconductor equipment provider ASML to not sell their technology of deep ultraviolet lithography machines to China. Casey's General Store is going to replace Logic in the S&P 500 prior to the open on Thursday. We've been talking about this store because it's fascinating to me. I've never actually seen one. It's a rural convenience retailer and food service company with a large fuel business. Think of it as a massive gasoline pumps in the Midwest, small town markets, and South. But inside the businesses include grocery and general merchandise, as well as prepared food and dispensed beverages. Fuel remains an important traffic driver and contributor. The inside business is more differentiated part of their business model, as it tends to carry higher margins and is supported by categories like pizza, sandwiches, bakery, snacks, and beverages. I hear the pizzas are amazing. And you're like, gas station pizza? Casey's value-oriented offerings have been key to driving traffic, supported by disciplined prepared food pricing and a growing Casey's Rewards platform, helping it attract customers across all income cohorts. Casey's has executed really well in recent quarters, highlighting the strength of its value proposition. With a challenged consumer backdrop, it's continued to drive solid inside same-store sales growth while steadily improving earnings, and shares have been rewarded for that performance, rising 35% year-to-date and 80% over the last year. The S&P 500 edition is clearly a near-term positive, as it should drive incremental passive and benchmark-related demand while bringing added visibility to the name. Still, the inclusion helps provide some support in the near term. The longer-term story will likely depend on Casey's ability to sustain healthy same-store sales growth and continue turning the strength of its value proposition into further profit growth. Uber is betting on Amazon's custom chips to boost AI efforts. A lot of tech news today, huh? Uber's using Amazon's custom chips to speed up computing and train artificial intelligence models, the cloud giant said today. The ride-hailing firm seeks advanced hardware to handle growing digital workloads. Ultimately, the deal means the two companies will expand a relationship with existing cloud partnership by enabling Uber to use Amazon's Web Services Graviton chips to support smoother rides and deliveries and Trainium processors to train AI models that power its apps. Uber is working to optimize its digital interface, accelerate ride matching, and personalize user experiences to attract users and gain a competitive edge. Amazon, meanwhile, is investing heavily in the growing appeal of its custom chips and attracting enterprise customers to capitalize on booming demand for AI model training and inference. Big news out of Apple. One of Apple's key product launches for 2026 might be facing delays. The company's planned foldable iPhone has run into some engineering problems during testing, and mass production could be delayed as a result. The complexity of the novel design is reportedly taking longer than expected to perfect and could push back the product's launch by months. Apple planned to initially produce 7 million to 8 million of the foldable phones, with a price target of over $2,000. This would be the second Apple foldable product that has faced delays due to engineering. There was a $3,000 foldable iPhone that's going to be delayed until 2029 or later. A little bit more on Apple. Analyst David Voigt, he's looking at the App Store data. The source of Apple App Store data comes from Sensor Tower. So UBS analyst David Voigt indicates reported growth came in at 7% in the March 2026 quarter, weighed down by flattish growth in the U.S., while the March 26 quarter's growth was up 80 basis points quarter over quarter. He notes the comp was 180 basis points easier. Looking ahead, the comp for the June 26 quarter is 12%, basically unchanged quarter to quarter, as comps do not begin to ease until 2026 quarter of September. With all this going on, Apple iPhone sales continue to surge as the iPhone 17 outpaces the iPhone 16. Bernstein analyst wrote in an investor note yesterday, global iPhone sell-through, that is, sales of iPhones from retailers to customers, increased 26% year over year in February. The analyst says iPhone 17 unit sales are up 20% versus last year's iPhone 16 through September and January. The base model iPhone 17 accounted for 39% of that growth, while the iPhone 17 Pro Max made up 21% of the increase. The average selling price, or ASP, also climbed in February, growing 6.9% year over year. So far, the average selling price has improved each month since the iPhone 17 launched in September, with the exception of October. China provided the biggest boost to average selling prices, with growth of 20% year over year. However, Bernstein said that the January and February iPhone revenue is estimated to have been $35.7 billion, which was below the firm's anticipated $56.5 billion. That's a big miss. Apple reported record revenue on the iPhone of $85.3 billion in its first quarter earnings in January, well ahead of expectations of $78 billion. Some of that miss this recent January and February might be pull forward into the holiday period. On the Mac side, Bank of America global research analyst Wamsi Mohan said if Apple's new MacBook Neo can grab 10% of market share in the entry-level laptop space, the $599 computer could provide an additional 3 cents of earnings per share in 2026. They see the Neo as a meaningful tailwind to Mac revenues and total company earnings per share, as the company's revenue should be incremental to Apple, the MacBook, the Neo, the cheap one. The 13-inch laptop runs on the company's A18 Pro processor, which is similar to the chip found in the iPhone 16 Pro and Pro Max. If Neo proves successful, Mohan explained, it could provide a benefit to Apple's services business, the second largest segment behind the iPhone. Apple, like the rest of the computer technology industry, is also, however, contending with global memory supply crunch caused by the worldwide AI data center build-out. I have a Pints and Portfolio coming up Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. I would love to see you there. It's a day where I get to buy you beer and we get to talk financial planning, do a check-in on how you're doing financially speaking. I'm going to bring Ryan and Julie, 2 CFPs from EP Wealth that work with CFP Chad Burton. It's absolutely free to you. You just have to get there, and you have to sign up at robblackshow.com. We do a portfolio review as well as a preliminary plan, which gives you an angle on how you're doing financially speaking. We run a Monte Carlo scenario after the event because, of course, we're going to be drinking a couple beers, and that's bad form. Or it could be a cider, or it could be water or soda. You don't have to drink alcohol. It's not that, no pressure. You can sign up for the event at robblackshow.com. It's robblackshow.com. I'm Rob Black. That's Sunnyvale, California, Saturday, April 18th, 11:30 to 1:30.
Join Rob Black in Sunnyvale, Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Markets are lower this morning, and I would say not falling apart, but the S&P 500 is down 90 basis points, almost 1%. The Dow is down this similar amount, 90 basis points, almost 1%. NASDAQ's down 1.2%. The Russell 2000 is down 60 basis points. The VIX is just under 27, so it's at 26.52. The U.S. has struck Karg Island as Trump repeats threat to destroy Iran. I found this interesting. The dividend yield on the S&P 500 is now at a 50-year low. The dividend yield on the S&P 500 is nearing its 50 years low as a paltry 1.24%, according to Trivariate Research founder Adam Parker, who pointed out that in a note today, the only lower moment for dividend yields dates back to the tech bubble trough, when it stood at 1.09%. Over the last 100 years, the S&P 500 has averaged roughly a 10% annual return, with approximately 30% of that coming from dividends. Percentage of companies with a dividend sits at 56.5%, not meaningfully different than 25 years ago, but because it's a market cap weighted index and tech gives very little dividends, that's what's hurting it. Companies like Microsoft and Nvidia are perpetually in high earnings growth mode, rewarding investors with higher stock prices and not necessarily focusing in on the dividends. Instead, they reinvest the cash into the business or back into stock buybacks. The dividend yields on the Magnificent Seven. I'll start with the highest. Apple at 1.16%, Meta at 1/3 of 1%, Alphabet at 1/4 of 1%. These are dividend yields. Microsoft at 16 basis points, Nvidia at 2 basis points, Amazon at 0, and Tesla at 0. Well, there's some pretty good insight there. Stocks are mostly lower today as the likelihood of the U.S. and Iran reaching a ceasefire agreement before tonight's self-imposed 8 p.m. Eastern Time deadline becomes increasingly unlikely. The Wall Street Journal reported that Iran has cut off all direct communications with Iran, though mediated discussions are still taking place. CNBC reported that a senior Pakistani official who is close to the negotiations between the U.S. and Iran has said there is no hope anything will be confirmed today. President Trump has ratcheted up his rhetoric, threatening a whole civilization will die tonight if a deal is not struck. Oil prices have steadily climbed today. Crude's up $4, up 3.5% to 116.41 cents per barrel. Energy sector is holding some nice gains, but utilities are up 1/3%. It's the only other S&P 500 sector that trades higher. Losses are most acute in tech and consumer discretionary. Escalating geopolitical tensions remain a key overhang. Tonight's deadline is self-imposed, a signal the risk of further escalation could happen, an outcome that could keep oil prices elevated for longer and continue to pressure equities. If we strike their oil infrastructure, it's going to be bad news. That's why you should talk with a financial planner. Are you diversified enough from the worst happening to your portfolio, which could set you back, as it did in 2000, 3 or 4 years, 5 years, how exposed you are. MGM Resorts International is the best performer in the sector of consumer discretionary today. They hit its highest level since early February. Hilton Worldwide, up almost 1%. People love to travel. Las Vegas Sands is rising towards its 50-day moving average. Vegas is losing a lot of gamblers because of apps. Yum Brands hit its best level in nearly 2 weeks before reversing this morning. Starbucks is close to 100. Some laggards include Norwegian Cruise Lines, down 4.4%. Tesla's down another 4%. Its lowest level since early September, sitting at 339. Intel joined the company's Terafab project. Registrations in Germany increased fourfold in March, and yet it's getting hit pretty hard. Carnival Cruise Lines down 3.77%, and Royal Caribbean down 3.6%. Novo Nordisk's explosive Wegovy pill has done really well. A new wave of patients into the GLP-1 loss treatment. It's one of the earliest takeaways from the rollout as Novo's pill appears to be expanding the obesity treatment market, largely drawing in new patients rather than converting existing ones from injections. It's the early days for the pill, but many patients have yet to reach higher doses of the drug, and their experiences vary. It'll take some time to determine how effective the pill is in supporting patients' long-term weight loss journeys. Novo has a head start in the pill arena, even though Eli Lilly is they just started selling their GLP-1 pill on Monday. They won approval and started selling immediately. Lilly's pill is called Foundeo. It's trying to capture a segment of the market, in part because it lacks the dietary restrictions that come with Novo's oral drug. The Wegovy pill appears to have had the most explosive launch of a GLP-1 product yet. The latest number of Novo disclosed in February is that more than 600,000 prescriptions have been written since its launch, including for more than 3,000 patients in the first week. Analysts at BMO Capital Markets attribute some of the early uptake to an attractive entry price of $149 per month and its connection to the well-known Wegovy brand. Pill carries one of the lowest cash prices for a GLP-1 therapy, ranging from $150 to $300. Pill's launch has done little to boost Novo's stock price. Novo is struggling to win back market share from Lilly in the broader obesity space and convince investors that its drug pipeline can help it grow beyond its existing products. This is interesting. The Wegovy pill is attracting patients with a fear of needles, which is estimated to affect up to 25% of U.S. adults. The drug is also an alternative for those who have had difficulty accessing the branded GLP-1 injections or other medications. The list price of their shots are roughly $1,000 a month, so cutting it down to $149 a month seems pretty doable. For some. I'm not spending your money. High prices, it probably shut some people out, and now these lower drug prices, which you can swallow as a pill, probably pulling some people in. One Bloomberg analyst is outlining all the reason he's sticking with his call that Bitcoin will crater to 10,000. His one caveat is if it can hold the 75,000 level, Bitcoin bulls may prove him wrong. Other experts called his prediction an attention-grabbing extreme and almost unimaginable. I like knowing what the analyst community has to say about things that I own. I don't know any Bitcoin. I successfully traded it once last year, and I don't know if I want to do that again. Mike McClone, a Bloomberg senior commodity strategist, stated on his prediction for Bitcoin to crater to 10,000. He added a caveat that the asset could prove him wrong. He told Sherwood News that 75,000 was moved down from the 94,000 at the start of 2026 as a potential prudent short level and a primary leading indicator and risk asset. His base case for 2026 is surge in volatility in gold and crude will mitigate and start migrating if the stock market and peaking cryptos in 2025 were a precursor. He argued that when beta falls, the tide goes out for all risk assets, and crypto assets are amongst the riskiest and most vulnerable to some overdue reversion of millions worth of billions of dollars, but tracking nothing of substance. Bitcoin may have the blessing and curse of being first. Crude oil surges can break stuff, and 2026 may have found its catalyst akin to 2008. It's interesting how much the community hates him. Nick Puckrin, CEO and co-founder of Coin Bureau, said, Bitcoin at 10,000 is extreme call. The 75,000 level is a reasonable one to watch. If Bitcoin breaks above that level and holds, there's more support and momentum to the upside. But remaining below this level doesn't mean it will suddenly crash to 10,000. BMO, capital market sees $1.5 billion boost from Netflix price hikes. Brian Pitts, an analyst, says we estimate recent U.S. price increases should contribute $1.5 billion of incremental revenue in 2026, providing 3.3% growth from a pricing alone. As bears question the durability of pricing power and slowing engagement growth, he sees a cleaner Netflix story post Warner Brothers Discovery merger break as investors refocus around core near-term fundamentals and seek evidence that Netflix can scale a massive $10 billion advertising business over the long term. Netflix started a gaming channel for kids under 8. Weird to me. It's like kind of admitting that you're marketing to the future in a way that we as a society don't like to admit to. Markets dealing with fading optimism for a ceasefire between the United States and Iran. U.S. and Israel strike Iranian infrastructure. Crude oil prices are climbing today. The cost to fly private is up as much as 20% with fuel prices soaring. So not only do we have to pay more to go on crappy United Airlines flights, nicer Delta ones, we got to pay more for our bags, more for the tickets. But if we fly private, like we well-heeled travelers do, even on previously booked flights, fuel prices push $4.65 a gallon on average, out from $2 for jet fuel. Now, jet passengers typically have deep pockets. Some are opting for smaller aircraft, and brokers are hedging fuel costs in order to save money. One firm recently booked a $520,000 flight from Dubai to London on a Boeing business jet for a client. That same trip now costs the client, or did cost the client, $400,000 in 2023. Can you imagine spending $500,000 on a flight? Difference is entirely due to fuel prices from $400,000 to $520,000. A lot more customers turn to private air travel during the pandemic to avoid crowds. The option remains popular and has become more important to the aviation sector as wealthier households prop up spending in travel and other sectors. That would be an area that we should tax more, in my opinion. In large part, if you say you're going to tax the wealthy, and they're like, I'm going to move to Texas from California, but they still want the private jets. And they say private jets, and I'm not an environmentalist in any way, shape, or form other than I'm a dad. They say that why private jets are really bad for the environment. Waymo is providing a commercial robotaxi service in 10 U.S. metro areas. But their co-CEO, Dmitry Dolgov, said the self-driving tech will eventually be in personal cars. The company last year said it's in early talks with Toyota to explore the idea. The technology is solved, but then if you're in the middle of nowhere and there's just not enough density of the trips, it doesn't make sense for a ride-hailing service that Waymo is running to have cars on standby. Waymo has previously said that it's exploring other commercial opportunities beyond ride-hailing, including licensing its technology to other automakers. Something that Elon Musk has said he's tried to do at Tesla, but no one showed any interest. So let's talk about what could happen if the United States strikes hard on Iran tonight. Keep in mind, volatility is normal. Since 1928, the market has had 56 10% corrections. The market's had 30%, 15% or more, 22, 20% or worse, 19, 25% or worse, 13, 30% or worse, 7, 40% or worse, and only 3, 50% or worse. That's the number of S&P 500 drawdowns since 1928. The returns after the drawdowns are even more surprising. The 1-year average return after a drawdown of 10% is up 15%. The 3-year return after a 10% drawdown is 42%. And the 5-year is 72% on a 10% or worse. Let's just jump to the final thought here and say, well, how about that 20%? Because that's maybe what we'd be looking at if the U.S. strikes Iran harder. 1 year after a 20% drawdown, the markets are up 17%. 3 years, they're up 45%. And then 5 years later, 74%. I'm not all that stressed. You can find me online at robblackshow.com. That's robblackshow.com.
Don't want to work forever? Check out the Retirement Planning Guide on robblack.com. That's robblack.com. Powered by EP Wealth.
I was listening to a podcast this weekend while I was driving for Easter. And oh boy, America is the wealthiest country the world has ever seen. And we know that. If my mom and dad were alive, they would have a lot of wealth. Well, they'd have more wealth than they had when they died 5 years ago and 25 years ago. And they're passing down that wealth now. The first real people born in the 1900s probably didn't have a lot of wealth. But by the time you were born in 1920, 1930, you had a career, you had some pension, you created some wealth, you bought a house. So the wealth is not evenly distributed as a problem. It never has been. It probably never will be. It's super concentrated. The top 10% control nearly 70% of the wealth in this country. The top 1% has the same amount of wealth as the bottom 90%. The top 1% has the same amount of wealth as the bottom 90%. That's insane. How many households in the United States do you think are worth over $30 million? I'll give you a second. Just, do you think it's 50,000? Do you think it's 100,000? Do you think it's 300,000? Do you think it's 1 million? Is it 2 million? The number of households that have over $30 million or more, it's 430,000. Wow. I'm wealthy now to the point that I flew for the first time first class for a holiday vacation back at Thanksgiving. That freaks me out. I've never done it. It was quite enjoyable because it was a long flight. And I wasn't cramped in. I wasn't sitting next to someone who decided to buy the stinkiest food on the planet and eat it on the plane. So within that 430,000 that have 30 million or more, there's 74,000 that are worth over $100 million or more. Over the past few decades, the growth in the number of very rich households has surpassed general population growth. These are blowing me away. Now, these numbers are adjusted for inflation. But, you know, Saturday Night Live has that Five-Timers Club. There's a $50 million and $100 million club now in the world. And you've got to ask, don't. Some people would think this is a bad thing because so much money is concentrated in the hands of so few. Others would say it's a somewhat natural outcome of the system we operate in. The decision for myself to make back when I was in my late teens, early 20s, I didn't want to work for someone, so I wanted to start my own business. It paid off beautifully. Now, I didn't get married in my 20s. My first marriage was to someone who was incredibly beautiful, but not the right person for me. Because I didn't get married in my 20s and I worked really hard and I thought I deserved it. There's a lot to say about wealth inequality. It could mean more extreme election outcomes. I was having Easter dinner with my family and extended family. Father-in-law, all that kind of stuff. And to the person, I think they're all Democrats unless I can't figure it out. And they're like, Democrats are going to sweep up in the next election. I'm like, I don't know about that. I think there's this dude who's about to become a trillionaire, and he's going to put around $250 million on elections. And everyone at the table was like, shocked that I would say that. The idea of a wealth tax on the super rich is gaining steam with more politicians and countries, but it's really tough to implement that. As we've already seen many billionaires leave California early so they don't get caught up in a California billionaires tax. It's pretty nuts out there, as I like to say. I like 5% and 10% and 20% drawdowns on the market. It doesn't bother me in the least bit. How do you feel about them? So I've seen it hurts when you're, worth millions and you see a 10% drawdown. You're like, oh boy, for every million you own, you lose 100,000 in paper value, but that doesn't bother me. It's just paper. I care about the companies I'm buying, the ownership. One of the stock market's last havens is now at risk. So even if you're rich and wealthy, you can't necessarily hide your money in stocks. Value stocks or shares trading at low multiples to their book value have quietly marched toward a banner year. With the war in the Middle East threatening to upend the trade, leaving investors few places to find refuge from fears. The Russell 2000 value index is up 2.4% this year, beating the Russell 1000 growth, which is down 9.1%. The S&P 500 index is down 3.8% and recently notched its worst quarter in nearly 4 years. But the value stocks are doing well. Some of the value stocks like Moderna up 196% this year. Oh, no, I said that wrong. SanDisk is up 196% this year. It was a value play. It was boring old commodity. And then Moderna is up 67%. Acadia Healthcare is up 69%. But now that they've moved so much, isn't there some risk? And then you get like a holy cow value play like Nike. They're down 29%. Home builder Lennar value play. They're not doing anything good. Southwest down 24%. It's got a low PE. So the wall of worry is under full construction right now. Where do wealthy people hide their money? Where do you and your 401k? If you have $1 million and you're counting on getting to $1.5 million before you retire. People are starting to question a lot of the sanity. The Russell 1000 value index recently traded at 16 times projected earnings over the next 12 months. The Russell 1000 growth trades at 24 times. Some investors say that they still expect big tech shares to outperform value stocks in the long run. This is something we could talk about at our next Pints and Portfolio. Or if you want to drop me an email, rob@robblackshow.com. It's rob@robblackshow.com. I would love to hear from you. I would love to see you at a live event. You can sign up for the Pints and Portfolio. It is in Sunnyvale, California, April 18th, 11:30 to 1:30. I would like to get you to be one of those rich people, wealthy people who doesn't have to work till the day they die, who can be the greatest grandfather on the planet, because it's probably the coolest thing I'm looking forward to, knock on wood, if my kids decide to have kids. You can sign up for the event at robblackshow.com. That's robblackshow.com.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.